Good evening, everybody. It's Dave O'Brien here, Head of Investor Relations. Thanks for joining us at a reasonably short notice. I'm joined today by Gene Murtagh, CEO, and Jeff Doherty, CFO. In a moment, Gene is going to take you through the slides reasonably quickly, and then we'll hand over to Q&A. All told, don't really expect to go on much longer than 15 minutes or so. When we move to questions, if you could limit yourselves to two per person, we get through it quickly. With that, I'll hand you over to Gene.
Great. Thank you, Dave. And welcome, everybody. If we could move to slide number 2 here. So in essence, today we've agreed to acquire a business called BMC Manufacturing, which is an Ireland-based business for the time being, but supplying worldwide in a very fast-growing sector of the data centers. It's a business that's been built over many years by Brendan and his team. And in more recent years, it's focused very significantly on the data center opportunity, and well in excess of 95% of revenues derived from that sector now. The business has been acquired for an initial consideration of 850 million euro, which is made up of 600 in cash and 250 million of new Kingspan shares, which will be issued. The primary product that the business produces, and the one where we can get most significant global leverage, is a product called PDCs, Power Distribution Cabinets. And I'll show you later on just exactly where that's positioned in our space and how it's such a very natural next addition for the advances business within Kingspan. The deal itself, from a financial perspective, is obviously attractive. In reality, by the time we get this done, it's going to be, into the fourth quarter. So we will, all going well, we expect some contribution this year, but clearly the lion's share of it into 27 and beyond. So the first full year multiple looks like around 5x EV to EBITDA, and that's based on both a significant backlog and a very compelling pipeline of opportunity that Brendan and his team have been focused on, even in the absence of Kingspan so far. So the deal is significantly EPS accretive from the get-go. Jeff will take you through that shortly. And year one return on capital will be well in excess of 20%. Just on slide 3 then, some of the numbers here I've already talked about, but in terms of our playbook and how we operate, naturally BMC has been extremely successful in its own independent right. We intend to clearly add some horsepower to that whole effort worldwide, and part of that comes from our relationships with the key hypers and colos around the world, and also our ability to expand our manufacturing presence at some pace, which we've already demonstrated in the advances business and beyond in the wider Kingspan group. So a lot of the opportunity facing the business is, not surprisingly, in North America. Right now, the business is manufacturing in a number of premises in Dublin in Ireland, and about to move into an even more significant facility close by outside Dublin. And still the lion's share of the manufactured product out of these facilities will be heading abroad, and obviously most significantly to the US. We've recently commissioned a facility within the advances business in Glasgow, Kentucky, in the US, and there is a facility essentially right next door to this that we would be intending to convert to a BMC manufacturing facility as fast as we possibly can, but in reality that will take us through most of 2027 to actually get that up and running, and then obviously producing product out of it in 28 as we expand the product range and the customer base in North America. There's also an earn-out aspect to the deal as well, 50 million, which would take the total consideration up to 900, and that's based on the achievement of an average EBITDA over the next 3 years of 250 million. So from a debt perspective, immediately 1.9x is where it leaves us. Obviously comfortable from the limits that we set ourselves. And assuming we do nothing else and drive the thing for cash during 2027, that takes us to just over 1x at the end of 2027. So everything looking healthy from that side. On slide 4 and 5, these are kind of key to just, if you like, address people's understanding of where this fits with us. Like, we've been developing up through the white space into what we would call light grey at this stage, and the PDC product itself really does take us kind of into that borderline territory. And on slide 5, people always ask us, what is it that we do or provide through Advances and into data centers? And that's it in a nutshell on slide 5, where you see we literally began at the floor level through tail access floors in the US and Hewitson in the UK to the structural ceilings, and now obviously everything in between. So it's a modular hack unit that's got air management integrated, liquid cooling integrated, cable management, etc. And where you can see there, just on the bottom left of the graph, is where you see the PDC itself, which is literally bolted onto the hack, and obviously a very natural next step for us as a business. From a share of wallet perspective, which is like there are 3 areas that we find highly attractive in the general Advances space. One is, it's clearly a hugely growing sector, data in its own right, data, AI, technology, etc. Our market share is still tiny if you take a world view of the opportunity. That's an area where we're growing. And then in terms of share of wallet, that's been a critical area of focus for us, that when we've got the audience with the customer, we essentially try and sell to them as much as possible. And from a share of wallet perspective, per meg, it's been growing very rapidly over the last few years. We're up at around $500,000 per meg of opportunity from our current offering, and literally this product doubles that to about 1 million, assuming naturally we can execute and make that work. Then on slide 6, the strategic rationale here, I think, is very straightforward. We have a very solid track record of execution right across our businesses, but clearly in this sector as well. In terms of technology readiness, this is fully aligned to next generation data center power specs and requirements, and also the move to 800 volt, if anything, actually becomes an even bigger opportunity for the BMC business and its product set. And a very interesting dimension to all of this, which isn't something either Kingspan or Advances has been exposed to in the past, is the obsolescence opportunity. So in practice, these products will work for approximately 20 years, but in reality, things move on, computation requirement moves up, energy density moves up, etc., etc. And in practice, probably the obsolescence period for these products is in or around 5 years, which opens up obviously a critical and very attractive replacement opportunity over time. Again, extremely interesting for Kingspan. And then just finally on slide 8, I'll just take you to what it means for the overall group. We've clearly been growing at a significant pace for, well, a very long time now. Assuming our plans for this business in 2027 happen, which we'd be highly confident they will, it should take group EBITDA to around 1.78 billion and group trading profit to about 1.47 billion. And I'd stress this is obviously very significant organic growth of the BMC business itself in 27, growing EBITDA from approximately 90 to 180 or potentially even more. And that's all organic growth in advance of the horsepower we will put behind this in 28, 29 and beyond. And it's worth pointing out here, just even if you look at the recent 5 or 6 years, in 2020 our EBITDA as a group was just about 600 million. So assuming we achieve this target next year, in that relatively short 6 or 7 years, Kingspan Group's EBITDA and EBITDA will have both grown by 300%. And that's it in a nutshell. Now we'd be delighted to take your questions.
Thank you. To ask a question, please press star followed by 1 on your telephone keypad now. If you change your mind, please press star followed by 2. When preparing to ask your question, please ensure your device is unmuted locally. To allow everyone the opportunity to address the management team, we kindly ask that you please limit yourself to 2 questions. Our first question comes from Shane Carberry from Goodbody. Your line is open, Shane. Please go ahead.
Hi. Thanks, guys, and thanks for the presentation. I'll just stick to one in the interest of time. Could I just dig a little bit further into kind of the geographic expansion of this business? Obviously, Jean, you mentioned there in the presentation about, the new facility in Kentucky. How should we think about the expansion here? Will it be, existing data facilities that you'll be expanding and bringing the BMC product in? Will it be, BMC sites specifically? And how does that work in terms of the product that BMC are already shipping from their current facilities? Just how I should think about all that would be really helpful.
Yeah, thanks, Shane. So we will be, the facilities will be bespoke to the assembly of PDCs. Under the BMC brand, increasingly we're going to launch a Tate Power brand around the world as well. I think our preference would be to have these close or alongside existing advances facilities around the world. It doesn't necessarily have to be. Like, it can be a product sale or it can be a package sale. So that we're, it's flexible in that front. But obviously the opportunity worldwide is huge. The business is already serving some demand in Asia. So as that grows, and obviously as the North American opportunity grows, I think we'll just be expanding physical facilities, PDC dedicated, close by the advances premises as well.
Okay, understood. Thanks, Jean.
Thank you. Our next question comes from Flor O'Donoghue from Davy. Your line is open. Please go ahead.
Thank you. Just a couple from me. Firstly, just wondering whether BMC, is there a kind of a customer cohort they don't currently deal with that Advances does? Are they missing some hyperscalers, some of the bigger co-locators, etc.? And is that something you'll be able to, put them in front of now under Kingspan ownership?
Yes is the answer to that, Flor. Naturally, BMC have relationships with customers we do, as you'd expect. But I think obviously our global presence and really our kind of 25-year experience in the data center segment already means we understandably would have a lot more relationships. And therein lies the beauty of it all, that it's BMC's capability, its technology, and our scalability is where this all really comes together.
Okay, great. Second one, just more on the finance side, the kind of target of doubling EBITDA next year. Just to understand that, is that going to be based on a kind of a doubling in revenues as well, or will it be kind of held by margin, instead, or just to think about what we should be doing in terms of 27?
Yeah, Jeff will take that to you there, Flor.
Yeah. In very broad terms, Flor, you can model there's over 600 million of 2027 sales and 170 million of trading profit. So, still very, very, very strong trading margins into 2027.
Sure. Thanks, Jeff. Thanks, Jean. Thanks. Well done.
Sure.
Thank you. Our next question comes from Alexander Cramer from Kepler. Your line is open. Please go ahead.
Hey, thank you for taking my questions. Clearly you're more moving into power management, away from thermal and air management here. I'm just wondering whether this is also the direction you want to go in the future, and you want to continue to go into space doing acquisitions. And then the second question I have is really on the multiple. obviously a multiple of around 5 to 6 times 2027 estimates. Can you square this? Why the seller sort of accepted it? Is it because there were capacity issues or something like that? And then maybe if I can squeeze a third one in there, is there a lockup on the shares that are issued? Thanks.
Okay, so we take that in reverse. There is a lockup of 2 years post-close on the shares. So that might kind of answer your middle question. And that's about as far as I go on that. And then the other piece, I guess we're certainly not moving away from thermal. In fact, we're at the very, very early stages of growth and expansion on the thermal side. So we're really after maximizing the full solution that we can offer, rather than moving in any particular direction. So we see it as an enhancement of our offering to our customer base rather than a move in any direction. And yes, you can take it that we will continue to bolt on and expand technologies onto our offering for as long as our customers demand that from us. And we're in a strong position to be able to take this wider portfolio of solutions to the hypers and colos and others. So it's an evolving piece, very exciting, and I'd say many more steps to come as well.
Yeah, can I press a bit on the multiple here? Because
we'll talk offline, Alex. We got to get everybody on for a question. We'll talk offline.
Okay, thanks.
Thank you. Our next question comes from Julian Radlinger from UBS. Your line is open. Please go ahead.
Yeah, thanks very much, guys. So could I just get a little bit more help, please, with the accretion math? So first of all, did I just hear that correctly? 170 million trading profit next year on 180 million EBITDA. So that doesn't seem like there's a big difference. Maybe you can help out with D&A. And then will there be any PPA and just maybe an idea of sort of the interest costs? It would be great to get a sense for the overall EPS accretion if possible. Thank you.
Yeah, absolutely. I'm happy to take that, Julian. So going down the income statement, yeah, approximately 180 of EBITDA. Depreciation is approximately 10 million. So that bridges to the 170 million of trading profit. The interest cost directionally will be about 30 million on a full year basis. We intend to issue a public bond to fund this. The effective tax rate will be broadly at the existing group average, which is 16.5%. And the amortization in terms of the intangible of the order of 50 million, thereabouts, the non-cash amortization charge. If you run all of that through the numbers, it's approximately 38 cents of earnings on a full year basis, if you do the maths on that.
That's including the small dilution from the new shares?
That's net of the small dilution, and also the non-cash amortization charge is within that.
Okay, super. And then my other question was just on the 2027 outlook, which you're suggesting is very much locked in, basically, right? In terms of order book. Is it order book, or is it a pipeline? Is there a lot of wiggle room there? Could it be a lot better? Could it be a little bit worse? I mean, how sure are we about that number?
I'd be inclined to take the one we gave you. It is a blend. It's not entirely locked in. Nothing ever is. But you can take it that there's a very strong backlog and then a pipeline that's almost as good as, but just POs haven't been issued. So we'd have a lot of confidence around the delivery of that number for next year. And like I said, this is before we really get our shoulder behind the wheel and take this thing more global.
Wonderful. Thank you very much, gentlemen.
Thanks, Julian.
Thank you. Our next question comes from Ephrem Ravi from Citigroup. Your line is open. Please go ahead.
Thank you. So two quick questions. Firstly, apologies for going back to the funding. On the conference call on Friday, you mentioned you are not planning any equity, but obviously there is some equity component to it. And given the attractive multiple, I take it that it is because the sellers wanted to participate in the upside. And would that be a correct sort of interpretation of that aspect? And secondly, in terms of the obsolescence point, which you mentioned earlier, it was very interesting. So what percentage of your data center business today is refurbishment slash sort of replacement? And what could you see it sort of in 3 years time? Thank you.
Okay. So then, actually to date, very little. Like the sector is so young itself, and the buildings are so recent and so modern, like a very tiny part of our business would be refurb and remodeling so far. We see that clearly as being a much more attractive opportunity longer term. And then just on the dilution piece, I'll take that because I made the point myself. That was clearly meant in the context of any significant share issuance or dilution, which once again, I can tell you is absolutely not in the offing. And bear in mind, we still have a share buyback program, which we may or may not use to repurchase this stock. So like in all, we're talking here about little over 1% dilution. So that wasn't really what we were trying to capture on the comments last Friday.
Thank you.
Thanks, Evan.
Thank you. Our next question comes from Isaac Osio from On Field Investment Research. Your line is open. Please go ahead.
Hi, thanks for the presentation. Could you maybe give a geographical sales split of your 600 million revenue expected in 27? And maybe if so, you deleverage by 27. Do you see similar acquisition opportunities by the end of the decade in that space? And if so, would it be more in the white space or in the grey space?
Yeah. So in terms of the revenue split, it feels like around 50% could be US and then a very large chunk in Europe and a smaller chunk in Asia. That's kind of what it feels like. And on your second point, yes, I think in our very normal way, applying the same style and strategy to growing the business and expanding it, yes, we'll delever and we'll go again, both in this and indeed across the building envelope businesses in the group.
Thank you. Our next question comes from Pujarini Ghosh from Bernstein. Your line is open. Please go ahead.
Hi, and thanks for taking my question. So if we talk about the EBITDA margin expectations from this year, your kind of the expectation is 90 million of revenue base of 280, and next year you said 180 million of low 600 million revenue base. So the margin seems to be slightly weaker, and are you not baking in any synergy potential as you combine the two groups? So I think that is my question.
Well, sorry, Jeff will deal with just the other end of that in a minute. But in terms of synergy potential, like I kind of regard a doubling of the business in year one as pretty strong performance. And like I said, more to come in the future. So that's organic growth next year. And on the other piece there, Jeff?
Yeah, I mean, the margins remain strong into 2027. I mean, again, they're, bordering on high 20s into 30% in terms of trading margins. So, we're not planning for margin dilution here. We're actually planning for the opposite.
Okay, thank you.
Thank you. Our next question comes from Ben Rada Martin from Goldman Sachs. Your line is open, Ben. Please go ahead.
Hi, thanks for the time this evening. I said two, please. My first was just around the product mix of the BMC. Sounds like PVCs is obviously the growth area, but when you think about the three products that you mentioned today, PVCs, switchboards, and switchgears, how big are each of those within the scope of the business? And then just a second one on CapEx, and I guess the Kentucky expansion plan for BMC. Does this change any of the CapEx outlook for the business, and could you kind of to the capital intensity of the BMC business as well? Thanks.
Yes, the PVCs is approximately 90% and even growing as a portion of the product sales. So going back, it would have been more in the low voltage switchgear end, but much less so at the present time. And the opportunity clearly is around the PVC and the advancing PVC product itself.
And Jeff, on CapEx?
And just on CapEx, the guidance we gave on the earnings call on Friday was next year's CapEx of 360. Post this transaction, the guidance is approximately 390 in total, including BMC in 2027.
Very helpful. Thanks very much.
Thanks, Ben.
Thank you. We currently have no further questions waiting in the queue. I'd now like to pass back to Jean for any closing remarks.
That's great. Thank you very much all for joining us at such short notice. Anyway, it's a tremendously exciting opportunity for us and for the BMC team. And we look forward to getting it over the line and making it happen. Obviously, we're all available if you need to contact us individually hereafter. So thank you and goodbye.
Thanks, everyone.